Okay, welcome to the liquidity section of the Renegade's Forex Smart Money Concepts course. And in this section, it's probably going to be pretty short because liquidity is really not that complicated. It's all about basically smart money needing the opposite of whatever orders they're putting in and using other retail traders' stop losses as fuel for their moves and being able to inject much more liquidity into the market, or excuse me, much more volume into the market using liquidity. And so liquidity is now going to be seen by you as the fuel for smart money to make their moves and to make the movements that we see now in price on a regular basis. Okay. And so in this example, we have one of many examples in which smart money accumulates orders in here and they create a ranging market that has equal highs and or equal lows. You'll see many different variations of this, and I don't really teach or actually use any of this in trading, but it's more so just to express an idea and like the concept of how stop hunts and how retail traders place their stop losses in order for them to be hunted by smart money. And so in ranging markets like this, and later on in the next video, we'll talk about internal structure and how that works in trending markets. But ranging markets like this, you have, many different types of traders who jump in trying to accurately predict what way the market is going to move. And you have basically price bouncing around, creating what retail traders call support and resistance. And so above support and resistance then becomes an accumulation of stop losses. Okay, so these stop losses can be depicted like this, and we'll just say usually there's going to be millions of stop losses, if not tens of millions, and they're going to look like this, right? It's just going to be a bunch of stop losses right there. And then it's also going to be a bunch of them right here, below this resistance level. Okay, and so it would look something like that. And this would obviously be a little bit more aggressive. Okay, and so let's explain what's happening here. So, we have ranging price action right here. These gray boxes in this scenario depict resistance and support. And so price is bouncing around in here, and we have traders start to join in saying, okay, I'm going to open a sell order here and I'm going to target these lows, or I'm going to target this resistance or whatever. Same with here, I'm going to target this resistance level, and they have their stop loss above here. And then we have people who have maybe an EMA that's down below here, and they say, I'm going to start buying because my EMA is crossed over, and I'm going to place my stop loss below these lows down here. And then we also have other traders who say, for whatever reason, okay, I'm going to start buying this because resistance has come in. Maybe this is the floor of a trend or of a down move, and I'm going to try to catch the up move. And so they say, okay, I'm going to place an open buy order here. I'm going to place my stop loss below this low. More traders come in who agree with that, and they say, I'm going to place a buy here and place my stop loss below this low. And as smart money accumulates these orders, they can then see this on, any broker would see this, or let me rephrase that, any institution would be able to see this from brokers' informations. And even if they couldn't see it, it's still obvious that this is what is starting to happen in any market that's doing this. And so price and smart money and institutions, they then say, okay, we for whatever reason, if there's a supply zone, or excuse me, a demand zone back here, and we're catching the extreme demand zone of a 4 hour, and this is a pullback on the 4 hour. They say, okay, we need liquidity to open more volume and to open our long orders here. And so we're going to accumulate here and wait until price or until retail traders start injecting their own orders and their stop losses down here. Okay. And so at this point in time, you would then see something similar to this, and it would be a very sharp move down, and retracement back into the zone, usually causing a change of character. Okay, now many times this move right here is going to be a wick, but if it's not a wick, what's happening? Well, we're then getting in breakout traders who are patiently waiting. So they're waiting, and they see, oh God, price breaking out right here, and we're now going to actually go lower. And so we're going to trade this breakout. We're going to enter in immediately as soon as we get our confirmation as breakout traders. We obviously are not breakout traders, but I'm saying like retail traders who break out of this resistance and they come in and they put their stop loss up here above these equal highs. And then what happens? Smart money wicks this low or gives the false impression of the breakout. And then it's, game on. All of a sudden, all the indicators start lighting up that the trade is going to go this direction. So then more people start jumping in up here. And, this again, just to paint the picture, this is happening on all time frames at all times. So this could also be a 1 minute, this could be a daily, whatever. It doesn't matter what the time frame is. I just was using that example as this a pullback and a 4-hour supply zone, just because that's obviously what I'm trying to catch and likely what you're trying to catch now too. And so after this stop hunt, what happens? Well, smart money then now takes all of these stop losses and runs through all of these people's stop losses and simultaneously then opens a very large amount of buy orders. Okay. And so they are injecting long orders into the market right here. And at that, so they have short orders open right here. So in this entire leg, they're injecting short, and it's taking out everyone's stop losses right here. And then right in this area, they're injecting long orders to come back up. Okay. And so this is now a demand zone that's been created, simultaneously taking out stop losses, and then long orders being opened here that are now going to start targeting these stop losses and creating a new higher high. And so at this point in time, you then get what we now as smart money traders call a change of character. And there's going to be people who have stop losses immediately right here as well as above here. There's going to be tens of thousands, hundreds of thousands, millions of stop losses and millions of dollars in liquidity sitting above here. And price runs back up, gives us the change of character, comes back down to mitigate these open orders that were short here, taking out those stop losses, and then simultaneously opening more buy orders. And then what do? They take out the stop losses that are up here, because most of the time, for whatever reason, smart money or not smart money, these are retail traders who are expecting, okay, maybe price here, this was just going to be a wick or something or whatever, like for whatever reason, they didn't get stopped out and they're hoping and praying that, maybe just this one time my order can move into profit and I can, catch a couple pips before, before I get stopped out again or whatever. And so they give this little pullback. At this point, there's probably still a load of indicators saying that, the market's bearish. We're going to get the bearish move we've been waiting for all week. And then what happens? Bam, we just get traded right through these stop losses here. And it's on at this point in time. Most anybody who's, decent retail trader has been shorting since, this move back here. So assuming this is a pullback coming down and they're turning the market around to continue and move higher, there is going to be more stop losses, which we'll get into in just a minute, above these old highs. And decent retail traders either are holding, hoping to go lower, or they've already taken some form of a partial, or us as smart money traders are trading with that trend, and we've taken, we've closed our volume here based on our expectations of what's going to happen, and then we start to get our confirmations, and us as smart money traders could then start to get long in situations like this. And it's the exact same thing for sells, which I'll go over in a second, but we would start to look at placing trades like this and targeting that next higher high and riding that trend up and riding the wave of the aggressive buying of smart money. And so let's do just a buy example really quick, or a sell example really quick. It's the exact same thing, just opposite. Okay, so a sell would look something like that. So you'd have a bunch of stop losses right here that are accumulating based on whatever, whatever retail. There's millions of different retail strategies, also millions of different reasons why people would sell here. And then we would also have millions of different reasons why people would buy here. And so price ranging. We have a stop hunt right here, and then we have a change of character, and then price comes back up to mitigate those long orders that are open here, and then sells off to create a lower low. And so this could also be a higher low too. So in this example, price would be coming from down here, down lower in the lower left hand corner, coming up, and then getting ready to pull back or continue. So this could be either way. This could be the top, what in the future, what would be a weak high, or this could be a strong high that's forming a lower low. Just depends on what direction we're trading. But yeah, that's, you get the point that basically this is how smart money, kind of tricks people into getting into the market to take their stop losses. And I don't think that it's necessarily, I mean, I don't know. There's a few ways you can look at it. It could be, it could be like a bad, like seen as a bad thing, but it could also just be seen as that's how the market has to move in order to accomplish what it needs to accomplish, which is mitigating supply and demand zones. And so I don't always necessarily view it as like, one, crazy bastard that's just hunting after everyone's stop losses. But there are times where it does seem that way, because it's just like there's so much volume going through the market that it has to have liquidity in order to fuel those moves. And so that's kind of how, an introduction to liquidity and how it works. And in the next video, we're going to talk about basically what's happening in between the previous low and then the next higher low that's forming after these moves.